Good afternoon and welcome to the Oxford Cannabinoid Technologies Holdings PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time by the Q&A tab situated in the right corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it receives in the meeting itself. However, the company can review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll. And I'd now like to hand you over to Clarissa Mimokoko, CEO. Good afternoon.
Thank you so much and welcome everybody, and thank you very much for taking the time to listen to our interim results presentation today. I'm joined by Paul Smalley, our Chief Financial Officer, and together we're going to take you through the interim results and also talk to the various announcements that went out first thing this morning, so we can give you a bit of an update on those as well. So just for anybody who might not be familiar with OCT or perhaps needs a little refresher of the story, we are a biotech company taking a pharmaceutical approach to cannabinoid medicine. The way we work is to improve the structure of cannabinoids by making modifications, chemical modifications, which can create medicines with market exclusivity, as well as deliver better stability and better bioavailability to patients. We're investing to bring our drug candidates through robust clinical trials for specific indications, so essentially following the standard pharmaceutical regulatory pathway to approval, which means that doctors and patients can have confidence that our medicines will both be efficacious and safe for the particular condition that they are targeting. Importantly, regulatory approval links to reimbursement by insurers, which is particularly significant when you're looking at the US market, so making sure patients aren't out of pocket. The US market is a big target market for us here at OCT. In terms of our focus, we are zeroing in on the global pain market, which is currently worth almost £60 billion and growing to about £75 billion by the expected approval of our first drug. We are narrowing that down somewhat by focusing on neuropathic and visceral pain, and then really drilling down into two particular indications in the pain space: chemotherapy-induced peripheral neuropathy and trigeminal neuralgia. Taken together, those two indications are estimated to be worth approximately $5.1 billion by 2030. So very significant market sizes and very significant problems to solve for people who are living with those conditions. In terms of the pipeline of our existing drug development programs, we have 4 programs in development. Program 1, 46-1201, is our lead program. And during the period, we were very excited to announce the successful completion of our first ever clinical trial, the single ascending dose study for 46-1201. The data that we have for this program is in IBS, as I said earlier, and also in CIPN, chemotherapy-induced peripheral neuropathy. It is a new chemical entity with patent protection, so potential 20 years market exclusivity based on that patent. The CIPN treatment market is worth about 1.17 billion, and the IBS treatment market about 2.1 billion. So again, significant market sizes. There'll be a bit more of an update on Program 1 in a few moments. Program 2, our second program, is a phytocannabinoid combination. So it's a drug-device combination using THC and CBD in an inhaler to deliver potential pain relief for people who are living with trigeminal neuralgia, which is an orphan indication. Again, orphan indication market gives exclusivity for 7 years in the US, 10 years in the EU and Japan. It's a big market, again, £1.8 billion and growing. We have completed preclinical development of that program, and I'll be talking a bit more about that later on as well. Program 3 is one of the almost 500 compounds in our derivative library, our proprietary derivative library of cannabinoid compounds. Some of them in licensed from CANNABINOID back in September 2021, many of them synthesized by our team in the labs here. So Program 3 is an undisclosed orphan indication in the neuropathic pain space. It's a THC derivative, which is demonstrating in early preclinical testing better analgesic effect than THC with lower side effects, so lower psychotropic effects. Again, this is a derivative, it's modified, therefore potential patent protection and indeed orphan market exclusivity depending on the indication that we choose to go down the path for Program 3. Program 4, also from the derivative library, so another cannabinoid derivative. This time marking an expansion, again, something that happened in the period. We announced our expansion into oncology with the identification of a potential first-in-class immunotherapy agent for the treatment of solid tumours. We're in early stage discovery work on this compound, but the early testing is very positive and obviously enabled us to make that announcement back in the summer. Again, this is a derivative which has been modified, coming from our library, so pursuing patent protection for that with a potential 20 years market exclusivity, and also looking at those orphan routes to market and market exclusivity as well. As I said, we've also got the library of almost 500 cannabinoid derivatives, which serve as the future pipeline for OCT, already proving to be worth the investment given the programs 3 and 4 that we've already identified. Moving on to a bit more of a detailed update on Programme 1, which was really the highlight of the period, getting our single ascending dose phase 1 study complete, which is targeting the 1.17 billion CIPN market. So chemotherapy-induced peripheral neuropathy, a very unpleasant condition for those folks who are living with it. It causes sensitivity or hypersensitivity to touch, so things that maybe you're not be able to pick up a coffee cup or drive a car. Also heightened sensitivity to heat and cold and motor deficits. About 60% of patients who are undergoing chemotherapeutic treatment go on to develop CIPN, so it is a significant problem to solve. We completed successfully our first clinical trial. The protocol is on the screen. I'm not going to go through all of it, but just to confirm that it was first in human, randomized, double-blind, and placebo-controlled single ascending oral dose. We were looking to test safety and tolerability in healthy volunteers. The dose escalation went very well. At every escalation point, the DERC, the Dose Escalation Review Committee, monitored the results, and we were able to proceed with the full dose escalation that we wanted to. As I said, the primary objective was to demonstrate the safety and tolerability of 461201 in healthy volunteers, whilst also providing additional information on the PK or the pharmacokinetic profile. It was conducted, the trial, I should say, was conducted in the UK with healthy volunteers by our partners Simbrek Orion, that was down in Wales. And the final dose was administered in September with a review of the clinical data at the beginning of October. We came out of that review having successfully completed the dosing and having no safety or tolerability concerns identified with any of the doses tested. So we're absolutely satisfied that it's now safe to proceed to the next stage of clinical development. In terms of further milestones across the year, really it is focused on 461201, the lead program. So in January, of course, we submitted our application to the MHRA for approval of that trial. That came through in May, a bit later than we'd hoped, but it did come through in May, and then we got on with getting that first dose administered in July, with the final dose in September, and of course the results in October. In the meantime, in April, we renewed our Home Office license, which is a very important part of our regulatory authorization to conduct the important research that we're doing. We've got a sort of 5-year history of successful renewals with the Home Office and have built a very good relationship with them over the time. So backed by the regulatory rigor and the sort of the governance practices we put in place. In June, we appointed a new role, Chief Medical Officer, and Dr. Tim Korn into that new role. So Tim joined us as CMO in June, and then in November was actually appointed to the board. So a real endorsement from Tim on the progress and also the strategic direction of the company. So joining as an executive and then moving on to the board in addition to his executive role in November. In July, as I mentioned, we expanded into oncology with that discovery of a potential first-in-class immunotherapy agent for the treatment of solid tumours. And then looking ahead, so the first half of this year, we are expecting to report the data that we can share on that final report for the single ascending dose study for 461201. And also we aim to commence our phase 1 clinical trial for our second programme. I'll say a bit more about that in a few moments. We have a diversified pipeline, which we believe delivers a robust strategy with downside protection. We're using a proven pharmaceutical model to get to those value inflection points, hopefully within a reasonable timeframe. And we have 3 types of inputs that we use for our approach. We're using synthetic compounds, exemplified by OCT 461201, our lead program, which is a totally new chemical entity in-licensed from a Pfizer spin-out, so that's a synthetic compound. We also use unmodified PCBs or phytocannabinoids. That would be a great example. There is the second program, the THC and CBD combination in the inhaled device that we're using for trigeminal neuralgia. And then also cannabinoid derivatives. As I've mentioned, we've got that library of almost 500 cannabinoid derivatives, which are modifications of the cannabinoids that you probably are more familiar with, THC, CBD, CBG, and so on. We modify those chemical structures in order to make them more bioavailable, more stable, and other changes. And so that's the third type of input. In terms of valuations, monetization, opportunities for revenue along the way, of course, there are value inflection points. And as we move our programs through the input stage, through the synthesis and screening stage, through the development stages and the clinical milestones, we de-risk the business, de-risk those programs, and increase value for the company. There are lots of opportunities for companies such as ours for out-licensing and partnering, and even divesting of assets along the way to deliver non-dilutive capital in order to continue to continue to fund ongoing drug development. And of course, the board is looking at all of those options all the time. I'm going to hand over now to Paul to take us through the financial statements, and then it'll be back to me for a bit more of an update. Over to you, Paul.
Okay, thank you, Clarissa, and thanks to everybody who's joined us on this the presentation today. There's just a few slides for report the financial statements, our financial performance for the interim period. So our year end is April. So this is for the 6-month period from May through to the end of October 2023. The first slide I'll go through is a highlight slide, which talk through the various highlights of the 6-month period, and then the following 3 or 4 slides will just go through a little bit more detail on the standard financial reports, the income statement, the cash flow, and the balance sheet. So in the 6-month period through to October 23, we spent £1.1 million on our lead program, OCT 461201, which was essentially to complete the single ascending dose element of the phase 1 trial. And the 1.1 million was approximately 90% of the program spend in the time. So really all our program spend was concentrated on the lead program in that 6-month period. Certainly compared to the comparative 6-month period from 2022, and on a pro rata basis to the full year of 2023, our working capital reduced during this time, particularly on our salaries and overheads, and so that reduced down to 0.6 million. The most important income for us in this time period was that in July 23 we received the R&D tax credit, which we'd applied for. That was relating to the financial year that ended in 2022, though. So there was quite a lengthy process in terms of getting that approved and released by HMRC after having a case check. But that money came in this 6-month period, and the upside of that from a process point of view is that having gone through a rigorous process relating to our 2022 claim, I'm pleased to say that the claim for our year end in 2023, the amount of 1.3 million, as was shown in an RNS earlier today, has been approved for release by HMRC. So that time frame has improved from our point of view, from a cash income point of view, and we'll be receiving that money approximately 6 months earlier than we did in the last annual cycle. At the end of October 2023, we had a cash in the bank of £1.1 million, and at that stage, the runway took us through, from a cash point of view, through to the end of Q1 this year in 2024. Through the couple of announcements this morning, clearly our cash position has changed at this point in time with the announcement of the investment coming in and the R&D tax credit, which will in our bank account. So together, that's approximately £2.5 million of cash that will be coming into the business. From a balance sheet point of view, we have very low liabilities. We have no long-term liabilities in the business at all, and our current liabilities are a low level of in total £0.8 million, of which at the end of October 23, £500,000 of that was trade payables relating to the vendors we'd used for running our phase 1 trial on the lead program. In terms of a bit more detail of our expenditure, all the program spend and the administrative expenses through that period were all either in line or below the levels of forecast, as we controlled our cash tightly to extend our cash flow where possible until we got to a position that we're in today. So looking at the income statement for the 6-month period, the loss for the period was £2 million, which was a significant reduction on the comparative period, or on a pro rata basis compared to the year ending April 2023. As I just touched on, there was just under £1.2 million worth of programme costs, the research costs, of which the majority of it was on the lead programme 461201. Our administrative costs have reduced by £200,000 compared to the comparative period last year, and again on a pro rata basis, significantly lower than our annual spend for the full year that was audited for 30th of April 2023. Of the 1.2 million that we spent during this period, £500,000 was on salaries and associated costs for the employees, and the other significant items spent were on £0.2 million on insurance, and £0.1 million on legal costs, which are predominantly around patents, which we'll touch on a little bit further on in terms of what's happened with those. And with a very small amount of exceptional items, they are share charges to the profit and loss account. And we, in the 6-month period, had a small amount of income from our savings account at purely interest of about £9,000. So as I touched on, before any tax, 2.4 million loss in the period, and then with our accrued tax credits relating to this financial year, it meant that we had a loss of £2 million in the 6-month period. From a cash flow point of view, as alluded to, the approximate £2 million pounds profit and loss spend, that's where the £1.9 million at the top line here is absorbed from operations. Touched on, received £9,000 in from interest, and then the tax refunded was the R&D tax credit relating to the financial year of 2022. So that meant that in the overall 6-month period, we had a cash outflow of 1163, so just under £1.2 million, which meant that from an opening position of £2.3 million in the bank on the 1st of May 2023, on the 31st of October, we had £1.1 million in the bank at the end of this interim period. As I touched on, from a balance sheet point of view, our total assets are at the end of October 2.8 million. There's no fixed assets or long-term assets. All our intangibles, which were licenses, have been depreciated, amortized down to zero as at the 31st of October. So it's all on current assets, which is split into two major items: the cash at the point in time, which was £1.1 million, and the remainder of the current assets was the R&D receivable, of which the majority of that has just been released as part of our FY 2023 claim. So overall, our assets are 2.8 million, current liabilities at 0.8 million, with 0.5 million being the trade payable that alluded to. And so we've got net assets at the end of October 2023 of 1950, so just under £2 million. So in terms of the financials, that was the position as at the interim statement date of 31st of October. And there's just a couple of significant post-balance sheet events to highlight to you, which are also part of the interim statement. As Clarissa has already alluded to, touched on, that Tim Cohen, who joined our executive team in June last year, was appointed to as a director to the board in November 2023, which is excellent news for us, and an endorsement both from Tim and it really helps the board composition, given that his background, as it shows on here, with some of the companies he's worked for, from a CMO point of view, and from companies who are positioned in similar markets to us. So we're delighted that Tim's part of the board now. The second major thing that's happened post the balance sheet date was earlier in January 2024, is the patent application for our second programme, OCT 130401. It was a European patent application, and then we're going to follow on with expecting to file international applications in the next year. These are related to our second programme, which Clarissa is going to touch on as we look at our forward-looking position. And they're the main two items post-balance sheet. We're just pointing out that from a patent point of view, this will give us exclusivity for up to 20 years from the date that we filed, so the protection against our second programme. Okay,
Thank
Yeah,
you.
thank you.
Thank you, Paul. That's great. So I think just to touch on the key highlights then from the interims before we move on to talk about the announcements from earlier on this morning. So the phase 1 single ascending dose clinical trial, clearly a big highlight for us and an extraordinary achievement for this small team to get essentially a new chemical entity into the clinic and being tested in healthy volunteers in a reasonably short time frame from IPO. So that was a very big highlight, and of course the results of that being so successful are fantastic too. Secondly, the expansion into oncology. Obviously, we've been focused on pain, and we do continue to focus on pain in the main, but having that additional oncology potential candidate, the first-in-class immunotherapy agent for the treatment of solid tumours is a big potential win for the team. And as I said, some ongoing testing happening on that, but already a good demonstration of the value in that, or the potential value in that cannabinoid derivative library. And then, of course, the board appointment of Tim, moving from joining us as CMO and then adding in the role on the board of directors. His drug development experience sort of speaks for itself, and we are absolutely delighted to have his experience on the board. So that was a sort of canter through the interim results, and I'm going to move now to talk to you about the announcement that we made this morning, or a couple of announcements that we made this morning. The most important, I think, being the fundraise announcement. We've raised just over £1.2 million by way of one convertible option and also an equity subscription. So we're absolutely delighted to have cornerstone investor Canthian Capital on board as a new shareholder, as a cornerstone. Canthian are very experienced sector specialist investors who have a mandate to invest in biotech companies with near-term catalysts. So their investment in OCT is a real tangible third-party endorsement of the strategy that we're following, of the drug development that we're doing, and of the fact that, in their view at least, we have those near-term catalysts coming down the pipeline. The convertible loan note is a total commitment of 565,000, of which Canthian is leading with 450 of commitment, with a potential further almost 1 million from Canthian if we move phase of 130401 through that phase 1 trial successfully and therefore into a phase 2. So they would be looking to fund the phase 2 as well. They want to be long-term partners for the company, both perhaps for 130401 and other programs that we're working on. We've got additional participation from existing shareholders and directors. That's all conditional on shareholder approval. There'll be a notice of meeting to get that approval, seek that approval from shareholders coming out in due course. A couple of things to note about the convertible loan note, perhaps, although all the detail is in the RNS, but might be worth just mentioning. It's an 8% interest rate convertible, it's 8% coupon, and it only has 2 conversion tranches per note. So, for instance, Canthian will only be able to convert their loan into shares twice during the term of the loan. That's a really useful protection for the company and should give a lot of comfort to any shareholders who are looking at this and wondering how it might work and whether it might put downward pressure on the share price. So the other important thing to know about that convertible, again detailed in the RNS, is that it has a floor price of the issue price that we announced this morning of 0.5 pence. So it won't be ever converted lower than the rate at which other investors came in today. But more likely it'll be converted at a higher rate than that because it'll be at the 10-day volume weighted average price of the previous 10 days trading at a 10% discount. So really Canthian coming on and hoping that the journey for OCT is positive and we've got forward momentum and share price growth, and very happy to take their fewer shares at a higher price further down the road. So that's the convertible. The equity subscription, also additional cash in, £640,000 from existing and new shareholders. That's only conditional on admission to trading and the FCA processing the capital reorganisation that was approved by shareholders at our AGM in September 2023. So that's just the straightforward process that allows us to issue these shares at this price because, of course, we can't, in the company that rules, issue shares below nominal value. So it's just a redenomination to adjust the nominal value, which has no impact on the value of individual investments. The use of proceeds of this fundraise, so it'll get us well underway with our phase 1 clinical trial for 130401. So we'll have a second program in the clinic, making us again much more attractive target or candidate, I should say, for other companies to look at our programs, think about partnering with us, etc. It also includes the funding that's required to open FDA investigational new drug filings. So getting those INDs filed with the FDA, is really important. Very well recognized milestones by investors, particularly in the United States. And of course, getting approval in the US is a key strategic goal for us as a company. So it includes the funding for opening those, and it extends our working capital as well, so that we can get all these things done. I want to look in a little bit more detail at 130401, because that is the program that we are really talking about funding most significantly with this particular raise. I've mentioned before, of course, that it's targeting trigeminal neuralgia. That's a very severe and sudden onset facial pain condition that is characterized by brief but excruciating attacks in one or more of the 3 V branches of the trigeminal nerve, which leads to a very severe impact and severe reduction in the quality of life of people who are living with that condition. In terms of causation, it's usually irritation by a compression of an artery, a vein, or some tumor growth, which causes the nerve to misfire with no proper triggers. Risk factors for TN include hypertension and MS, as well as family genetics, and you're much more likely to have TN or to live with TN if you're a woman over 50. In terms of current treatments, it's pretty poorly served. So TN patients are using anticonvulsants, antiepileptics, and prescribed muscle relaxants, also surgical interventions. All of these, come with side effects, and particularly, obviously, surgical interventions, very serious potential side effects. It's an orphan disorder with approximately 15,000 new cases in the US each year, a market size of about 1.8 billion, and therefore, a very significant problem to solve. We're going the inhaled pain relief route for trigeminal neuralgia because we believe that is the most efficient and sensible way to deploy the assets that we've got here at OCT. So there's large existing data to support the rationale, including safety and toxicology, and recommended phase 2 dosing for a THC and CBD 1-to-1 ratio in neuropathic pain. The THC or synthetic THC, DNB, is delivered via inhalation through a pressurized metered dose inhaler. Looks a lot like an asthma inhaler, so that you can track and measure the exact dose, and it's the same every time. It's a proprietary combination of THC and CBD, which we aim to benefit from the synergistic effect of those compounds acting in combination, which we hope will reduce the required dosage and any potential side effects. The dose-metered inhalation means that you're getting a consistent and a reliable and hopefully a faster onset and better bioavailable pain relief than you otherwise would. In terms of market exclusivity, obviously, I've already mentioned that it's an orphan disease, so orphan drug designation, so regulatory protection is a way to ensure market exclusivity. But as Paul mentioned, we've already filed just earlier this year a composition patent in respect of this program. So potential 20 years market exclusivity in relation to that composition patent as from the date of filing in January. We've completed the safety and toxicology preclinical development, which is aligned with the FDA requirements, meaning we can, once we get into the phase 1, begin opening those INDs, that IND with the FDA. Phase 1 is planned in Australia for reasons I will go into shortly. Just something to mention on this slide, which is essentially about the drug-device combination and its stability and its durability. In terms of the preclinical testing that we did, it was a very extensive program of preclinical work, and the through life of the canister was something that really stood out for us. So the consistency and the reliability of the technology that's been developed, is really fantastic. So we get over 160 actuations, so presses, and delivery of the composition successfully through without any change in particle size or distribution, etc. That data has also helped and contributed to enable us to file that patent that I just mentioned. So very happy with that particular element of the drug device combination development. This slide I think we have presented before, but it is just worth reflecting on the comprehensive safety and tox work package that we did as preclinical work for this particular program. We did that with Charles Rivers, very many of you will know, a very well-known CRO. And as you can see on the left-hand side of the slide, there are a very comprehensive number of preclinical tests, both 7-day and 28-day studies, which have got significant and very useful data sets that we have used in order to design the next steps in the clinical journey. So the path to trials is direct to Australia. So the Human Research and Ethics Committee, or HREC for short, has a very timely and efficient regulatory approach. It's Australia's equivalent of the MHRA here in the UK. The local committees are open to and very well experienced in cannabinoid research. The pathway with HREC supports the IND application process and is, compatible with the FDA in the US. Clinical research organizations, Australia is blessed with a wealth of CROs who've got significant inhaled cannabinoid expertise and acknowledged success records in those clinical trials. We're currently almost at the end of a comprehensive RFP process, and we'll be hopefully looking to appoint our CRO in the very near term. An announcement obviously will go out about that as and when we've made that decision. Again, just back to the Australian pathway. So Australia's got a very diverse and cannabinoid experienced population of healthy volunteers. Two things that are great about that. Number one, the FDA really encourages diversity of healthy volunteers in clinical trials, helps to get much more meaningful data when you've got a diverse healthy volunteer population. And cannabinoid experienced populations are useful from a clinical trial success point of view, because it's helpful to have folks who are understanding of the potential feelings or the impacts that you might have when you have consumed cannabinoids, so that those aren't reported as adverse events. The most important thing, perhaps, in the Australian pathway, or certainly one of the most important things, is the very favourable R&D tax credit regime. It certainly puts a smile on Paul's face. We get rebates in Australia of up to 43.5% of R&D spend. So that's obviously a very significant contribution to the ongoing development and allows us to really kick on and move forward with that drug development. That was, again, a little bit of a canter, I suppose, through where we are at in terms of interims and then the announcements from this morning. So I think, Alessandro, maybe it's time to turn it over to some questions.
Perfect. Yes, Clarissa, Paul, thank you very much for your presentation. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab, which is situated on the top right-hand corner of your screen. But just while the company take a few moments to review those questions that have been submitted today, I'd like to remind you that recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. As you can see, we have received questions throughout today's presentation. Clarissa, if I could just hand back to you just to read out those questions and give responses where it is appropriate to do so, I'll pick up from you at the end.
Thank you very much. Yes, I will work through as many as I can, as many as we are able to answer, as you said, Alessandro. So the first question on the list is a question about why there haven't been any recent director buys with prices at these levels. It's a really good question, and it really comes down to the fact that we've been in closed period for a significant amount of time. So closed period starts 30 days before publication of your results. Closed period has ended this morning. So director buys are very much controlled by both financial and statutory closed periods that the market imposes on us, and also when we are working with inside information, or information that isn't in the public domain that could have an impact on the share price. So there is a bit of restriction there. What I would say is that the directors are all incredibly supportive of the company. Obviously, we've announced this morning that, that some directors are participating in the fundraise, subject to shareholder approval. So I would expect you can see some support coming through from there. The next question. One of them said is, can you talk us through the steps that the company has announced today? I mean, I think we've probably done that in the course of the presentation we've just given. So hopefully that one's covered. Here's a question. The second tranche of investment from the convertible investors is predicated on payment of the invoice related to the first patient enrollments. Okay, this is talking to the milestone nature of the convertible. And the question is, when do you anticipate that will be? It's a good question. At the moment, as I said, we are in the sort of final stages of an RFP process to appoint our CRO in Australia. And I'm not in a position to give you any sort of specific timelines on when we expect that would be, because I wouldn't want to tie myself in and therefore impact my negotiating position with those organisations. However, we are looking to do this as quickly as possible. Our plan and our hope is to get things, get medicines in the hands of patients as quickly as possible. So we won't be dragging our heels. And I'd certainly hope it will be in the first half of this year. Next question. Paul, perhaps this is one for you. It says, the Canfian investment is very welcome news, but how far does this extend your cash runway?
Okay, yes, I can answer that one. Yes, so the investment was announced today along with the R&D tax credit news clearly improves our cash position from what we've been saying, that where the cash runway was going to take us through to the end of Q1 2024. With the fundraise and the money from HMRC is coming in, we will now have up to 12 months of cash runway, obviously deploying funds as appropriate to the running of the clinical trial that Clarissa just discussed. But up to 12 months, the cash runway goes to now, rather than the 3 months that it was previously. Thank you very much.
Next question is, what is the use of proceeds from today's raise? Well, I think we've comprehensively answered that one. It's to bring Program 2 into the clinic, into that phase 1 trial. It's to open INDs for Program 1 and Program 2, and to extend that cash runway, extend the working capital, provide working capital to the company. The next question is, what is the likelihood you're going to need to return quickly to the market for a further fundraise? It's a good question. I mean, I think Paul's probably answered it with the cash runway there. So, it's a cash runway of up to 12 months. So hopefully that answers that one. The next one is, can you speak to the dilution that's resulted from this raise? Yes, I mean, I can. I think when you're a pre-revenue biotech company, it's, raising capital and bringing cash into the business is the biggest challenge that you can have as an executive team. It feels like the actual research is the biggest challenge, but actually, although that's a very hard work and incredibly intellectually demanding, and our team is working tremendously hard on that all the time, we can't do that without being able to fund those operations and fund that R&D. So when we go to the market, we are always mindful of our existing shareholders, and we want to minimize dilution wherever possible. But we have to balance that with the opportunity to advance programs and deliver operational progress, move that drug development pathway forward, move our programs through the milestones so that we can actually, increase value in the company, and then look potentially to be more attractive for those non-dilutive potential injections of capital, which come from royalty agreements and licensing our assets to third parties, or indeed divesting of an asset completely to get a one-off payment. So, I think dilution's never something that we want to see, in significant numbers as an exec team or as a board. But we do also want to see progress, and we want to see development in the business. And sometimes you have to just balance those two things quite carefully. Okay. Next question. Have you any idea when Edison will update their research and give a further idea of the share price? Good question. I would imagine it will be quite soon. They tend to come with flash notes almost immediately after results presentations. So I would be following the company on their page. So if you go through to the Edison page, you can find us on the OCT page on Edison. If you follow there, you'll get a notification of the update. But yes, I would imagine that they will be updating their research. Obviously, quite a bit's happened since their last note, which I think had us valued at 2.7 pence a share in their view. We've had the patent application since then. We've had this round of funding. So, you know, there's some significant changes. So I suspect there'll be a further update in short order. Okay. Another question from David. With the drug device calibration, I think we're talking about the inhaler. Okay, with the PDMI and the measured dosing, can the program be tweaked for assisting sleep and anxiety patients? Very good question, David. So at the moment, we're obviously looking at trigeminal neuralgia for the inhaler, for the pressurized metered dose inhaler. And when you're going down the normal, you know, the standard pharmaceutical clinical pathway, you have to pick a specific indication to move forward. What we've got, though, you know, once we've got that phase 1 data, which, you know, we're about to kick off with this new set of investment, when we have phase 1 data and, you know, all being well and we have successful phase 1 data, which we expect we will, then we can consider indication expansion and use that original phase 1 data in order to expand the indication into other areas. At the moment, we're more likely looking at other neuropathic pain conditions, but, you know, it's certainly something that is on the list and on the minds of the team when we're looking at how we best monetize and how we best, you know, sweat the asset, so to speak, you know, really making the leveraging the data that we've got into the most valuable asset. I think maybe time for one more. There's one more here. So question about grants, actually. It's a good question. Other companies are in the position that OCTP is in and are applying for and receiving non-dilutive grants. Are you applying for grants? It's a great question. So it's something that we are always looking at as a team. I can't speak to there being any live applications in process at the moment. Of course, you know, we don't disclose applications that we've put in, but as soon as we've got any news on those fronts, we will be back to you with an update to the market. But it's certainly an avenue that we're aware of and that we obviously want to exploit as much as possible. I think it's a really good way of certainly collaborating with academics and you know, the NHS. Others have been following that path, and it's certainly something we're looking at. I mean, if you look back at our history and when we were first formed, we had an academic collaboration with Oxford University, and we're still very closely connected to Oxford and still in good touch with them. So, you know, we do really value the potential of collaborations with academics and with healthcare providers, and that's something that we will continue to look at and, of course, update you on as and when we can. I think that's probably all the questions that we can answer, Alessandro.
Yep, perfect, Clarissa. Paul, thank you for answering those questions you can from investors. And of course, the company can review all the questions submitted today, and we'll publish those responses on the Investor Meet Company platform. But just before redirecting investors, provide you with their feedback, which I know is particularly important to you both. Clarissa, could I just ask you for a few closing comments?
Yes, certainly. I mean, just to repeat, I think my thanks for those who have taken time out of their busy schedules to listen to us today and to ask questions. In particular, you know, when you ask questions, it really tells us that you're engaging with what we're doing and you're interested, and that's a real boost for the team here who work really hard to try and deliver what you'd like to see. So I'm hoping that people are very happy that we have got the funding that we have been looking for, and we can kick on with some really exciting operational progress in the months to come and keep the market updated, which should, you know, really take some pressure off of the share price performance. It's been an extraordinary time in the capital markets the last 24 months, I'd say, the last 12 months in particular, but, you know, 24 months. And, you know, we're all hoping for better times ahead to have this fundraise away and be able to kick off and get into the clinic with our second program and open those INDs. It's really exciting and really worthwhile for us. And we're just grateful to the investors who are sticking with us as we battle through.
Perfect. Clarissa, Paul, thank you once again for updating investors today. Could I please ask investors not to close the session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Oxford Cannabinoid Technologies Holdings PLC, we'd like to thank you for attending today's presentation, and good afternoon to you all.